that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the stock market one step at a time from a top-down analysis perspective, break down all the news, the action, the information, hopefully to help you guys better run your daily routines out there. Welcome out to our show, Wednesday, 11/11/2020. Got a good crew here today. I got Matt on the back end doing analysis, running the screen. Matty, how you doing today, sir?
Tim, I'm doing good. Excited to be here with the halftime crew to break down the news of the day. Should have a fairly efficient show here today.
And then one of my favorite people on the planet, Coach Greg Old Money Holmes, is here for our Wednesday guest.
Old Money,
the Old Money man.
I thought you were going to say I was your
Old
favorite.
Money,
man.
Cody,
darn,
Cody,
so
Cody, just like my kids, you're my favorite. I tell them all that they're my favorite. So you're my favorite too, Cody.
Is Cody officially?
I'm even wearing the CBMA. Come on.
Okay. So is Cody officially the baby of the family?
Yeah, he's like the little baby brother for sure. Yeah.
Can I play, guys? Can I play?
No. So the real question is if your kids are all drowning, who do you save first?
That is not the question.
That's how you know.
Any parent ever wants that.
Oh.
Listen, I go down trying to save them all. That's how it works.
Hey, Cody, I'll help you out. I'll try and save yours first because I don't have any.
Yeah, so. That's easy for Greg.
Cody, I know the world feels like a postmodern nightmare to you right now, but I don't want to explore.
What are you talking about? I'm the happiest camper in the world.
Cody's in dad euphoria, and just very quickly as we allow people to come into the halftime report, very quickly, a little bit of a filibustering moment, but I do want to share with the world. Liam said his first word the other day, correct, Cody? Right, and Cody really worked hard on this one behind the scenes, and you got to give him a lot of credit for putting in the college effort, but it was data. And Cody's on data like cloud 9 right now.
I don't believe that for a minute. I didn't know for a fact it was old money. That's what he said.
Money.
That's what Liam said. Old money.
Old money.
It was a special moment.
It was special.
When I saw that video on Twitter, it melted my heart a little bit. Being a father myself, it was really, really cool. By the way, before we get too far into the show as well, happy Veterans Day out there to everybody. I can't tell you, from Tackle Trading, Matt, I mean, we love our veterans. We love our military, across the board, no question about it. Support it without any reservations at all. A day like today is a day of remembrance, obviously. And I know that, if you did serve for our country, I just want to tell you, we appreciate you. There's no question about it. We do appreciate you. We're thinking about you today. Matt, any thoughts around Veterans Day?
No, I mean, just something that, everybody in the U.S. obviously takes a moment and gives our thoughts, our prayers, our love to everybody that has ever served in the military. Cody, your father, Tim, your daughter, served in the armed forces. So it's a special day for a lot of people in terms of remembrance and in terms of, showing our belief in those individuals and what they represent. So no, I mean, just, my heart goes out to all of them. They're amazing. We love them and we support them with every being of our soul. We support our military and our troops.
And I'm sure, Greg, you probably echo a lot of those statements as well. I mean, I know it's a U.S. Event here today, but it doesn't really matter to me in that regard. We celebrate all military at all times. Greg, any thoughts towards our military servicemen out there?
Yeah, so it's Remembrance Day here in Canada as well. So we have a ceremony at 11 o'clock on November 11th every year, and I obviously support the vets. For me, it became real in 2012. Like I always supported the Royal Canadian Legion and our military. I applied to get into the military when I was a younger man. It didn't work out because of an injury I had, but I went to Ypres, Belgium, and I got to see the grave sites from the World War I veterans, and to be in that space and walk those fields and walk those hills. It's very special, and it really rings true for myself and Canadians and Americans and everybody that was involved in any conflict. It's a big deal, and my heart goes out to everybody. My grandfather served in the military in the war, and unfortunately, I didn't even get to meet him. He was gone before I was born. So, we all have our special connections, and my heart goes out to all the military folks.
Thank you,
Greg,
Yeah.
that is absolutely amazing, and thank you for sharing. I couldn't imagine the emotion seeing World War I gravesites. I mean, I'd love U.S. history, military history, world history, and all that jazz. But I could imagine that being a really, really special moment. And I didn't know it was Remembrance Day in Canada. I knew you guys had your day to celebrate veterans, but I didn't know it coincided with the U.S. one.
If I can, I want to show you guys something. Just
Yeah.
This is I don't know if you'll be able to even see it.
Here, Matt, pull your screen down so you can see it better.
Yeah.
That's my rugby team in
nice.
in Ypres, Belgium, and that's the unknown soldier. That was a Canadian who made that monument, and that's in Belgium. It's an amazing place, and it was the feelings there were incredible, and the people that survived. It was just incredible, and something I'll never forget.
That's awesome, Greg.
Yeah,
that's awesome.
I saw a picture. I gotta find it. I saw a picture that was the British, one of their battalions, and it was like, this is a battalion the day before they shipped out, and there was like 3,000 of them, and then there was a second picture, and there was like 13 of them in the battalion afterwards.
Yeah,
I saw that.
We talk a lot about World War II, but World War I was a much more devastating war. The style, the trench warfare, the chemical warfare,
economically.
Oh my God! World War I, and we didn't record it nearly as much as World War II, like just historically, but World War I was definitely worse than World War II.
When I was in Belgium, we had a war historian do a tour with us, and he said that we lost the highest day of total deaths in one day. I believe it was somewhere around the number of 52,000, 51,000, 52,000 people. The first town I lived in, the town I currently live in, only has 70,000 people. So if you think about that as a number, that's basically losing 80% of a city in Canada, a small size city in Canada. So those numbers, when you actually hear that, it's like trading data. When you hear those kinds of numbers, it really hits home,
It's amazing.
Yeah, it's startling. Yeah. And thanks for sharing that picture, by the way. That's really cool that you had a chance to visit a site like that. I'm probably going to sit down and talk to my kids a little bit today about Veterans Day and the military and whatnot. Appreciate everybody's messaging here. Let's get into the show here a little bit. By the way, as always, hashtag Team Tackle in the chat. I saw a lot of our regulars coming in and starting to chat already. I do appreciate that. If you're brand new to our channel, come on in, give us a subscribe, click the bell. We do this show each and every day, for the halftime report on tackle trading. And on Wednesday nights, by the way, we actually have our Wednesday special tonight, 7 o'clock Eastern Standard Time. If you're going to be around tonight, make sure you catch Coach Noah Davidson. He's going to be teaching on secondary indicators, the way he uses them in our charting. And lastly, before we get started, if you're not yet a pro member of our tackle trading community, we have a 15-day trial of everything we do on the back end with coaching, with our traders, trading webinars, including our lounges and all that kind of stuff. If you want to test it out, give the 15-day trial a try. Come and join us. Click that link. It's in every comment section below. Matt, let's get right into the action here if we can. We've got, bullishness mostly across the board in the stock market. Tech is having a nice little rebound day in that regard. Give us a technical breakdown first, then we'll kind of go through some of the news.
Looking at this technically, we're a little bit overextended in the short term, obviously coming off the pre-election one day and then the post-election last week type of, euphoric market we saw. We came into these overhead resistance levels, and, I said this on Monday, and I'll repeat it here today. This day we had the vaccine news day, the Pfizer news, where we saw that, cash open just absolute, not the cash open, but the pre-cash open in the futures market just run very, very aggressively on that vaccine news. And then obviously mid-afternoon, we start thinking, okay, man, there might be some difficulty in actually doing this. It's not just going to be, just a straight shot here. And so obviously we saw a little bit of a sell-off, a little bit of an overreaction here. And I said on Monday that I'm going to discount that wick is what I'm going to do. And the reason I feel that's important is because if you don't discount that wick, you're really looking at this as a little bit of a momentum market. You're looking at this as a little bit of a crapshoot. But if you do discount that wick, and I do discount that wick, when you look at this on a 30-minute chart, you see that consolidation that we've talked about forming after some major movements in the marketplace when it gets overextended, whether you're talking about, you know, the post-election bounce in the market we've seen over the last week and a half, or whether you're talking about, you know, an earnings report, or whether you're talking about just momentum, when technical momentum takes hold. Whenever you get to that level of being overextended, a lot of times, especially in a momentum-based hot market, a lot of times what you'll find is you don't see those standardized bullish retracements that, you know, come back down 38% of the previous movement, reestablish a new support level. A lot of times what will happen in these hot markets, like, you know, 2013 when we had the, you know, quantitative easing infinity, in 2017 when we had, you know, that ridiculous, you know, bullish euphoria over Trump's tax plan. A lot of times what will happen, it will go up and then it will just base right here. Instead of showing that retracement coming back down, it just kind of flatlines here. And when it does that, you're looking at that as a little bit of high base type scenario. And when you're looking at it technically, excuse me, when you're looking at it technically like a high base, look at the consolidation you can start to see here forming. You know, from the futures market open right here on Saturday, establishing that higher high right there in the 35.65 range. You come back over here, double top, you come back over here in today's price action. That's right where you're fighting for that in terms of a breakout. So when you're looking at this on that intraday chart, I look at this level of consolidation here, and that's what I like to see. I would actually like to see a few more days of consolidation in a little bit of a tight range, playing a little bit of defense, waiting for those moving averages, especially the momentum one in the 9 EMA catch up to the price in the marketplace. And then you can start to see some technical situations where you can start mapping out, okay, now we're looking at buying here. We're putting a stop here because you have some consistency in technical analysis at that point. And so what I like about this technically is despite a lot of news in the marketplace in the last 3 days, I mean, Tim, Greg, I'm sure you guys have just been inundated with news the same way I have and the same way everybody else has, you know, trying to figure out what's going on with the election, trying to figure out what's going on with COVID, trying to figure out what's going on with stimulus, trying to figure out what's going on with themes, there's a lot happening in the market right now. We're just inundated left and right, like an old school boxer who doesn't know how to block a punch, you know, sitting in the corner, just getting hit over and over and over, kind of like Rocky in Rocky 4 getting hit by Drago in the corner there, round 15, just over and over and over there. And the market's taking it like Rocky Balboa, not going down, continuing to fight, playing that defense. And so I feel like the market playing this defense right now in the face of what could be fairly negative news you got to see it as a positive for price appreciation. And the longer we consolidate, you know, playing defense, but letting those moving averages catch up to it, I think this is a positive technically for the market.
You know, Greg, how are you reading price action here this week? Obviously, last week we had the explosive rally coming off of the U.S. election as, you know, traders, investors piled money back into the markets. Monday, we had the big gap up after the futures. Love the technical breakdown that Matt just did there. And I think it's really healthy, much more healthier here than it was even on Monday. I'm with Matt. I would love a couple more days of consolidation. But how are you reading the price action here, Matt or Greg?
Yeah, it's interesting. You don't really see it too much on the futures here, but if you look at the ETFs, the SPY, we you know, first looking at the VIX, right? So the VIX after the election, we kind of got that fallout of implied volatility there, and the market started to work its way back up. But then we started to see what I like to call price volatility. We got some major swings there, some really like that candle with the large wick that Matt was talking about there. You know, that's if you look at that as a percentage of the ATR, that's massive, right? That's a massive move. So we've had a bit of that recently, some big price volatility, but not really the implied volatility. So my expectation is similar to what you guys are thinking. I could see this trending sideways, you know, for a little while, building up some energy. before it decides to make its break one way or the other. And I think you got to favor this to the upside. I think the stimulus thing is still, still front and center to see how that's going to turn out. We don't know, at least I don't know, being from Canada, how your election is going to turn out as well. I know Biden's been awarded that by the media, but I'm not sure how the Senate and the House work out. And frankly, I don't really know that much about it, but I still know that will have some effects on the markets overall, or at least I believe it will. But yeah, I still see a bias to the upside. But if it went sideways for another, probably the rest of this week and maybe early into next week, there'd be no surprise to me whatsoever.
Mm-hmm. Yeah, in terms of the election, I think one of the updates right now, Greg, and probably what the markets are paying attention to is that Senate race. I know in North Carolina, Matt, and we're waiting for an official declaration in Alaska on some of those Senate seats. But really, there's going to be 2 Senate seats, Greg, runoff in January in Georgia, which could affect the split in what, who holds how many seats in the Senate. So we don't have clarity on the Senate yet. We've got pretty good clarity on the House. And Matt, you're on mute. I don't know if you're coming in here, but
yeah, what I was going to say is I honestly, and guys, I know we're still in election mode. I get that, but I don't think the market's that unclear here about the political environment in the U.S. right now.
Yeah.
When you're looking at the United States Senate, the House, it looks like Republicans are going to be, pick about 7-8 seats in the House. Still, the Democrats will have the leadership in the House, but the Republicans did narrow that gap. Very positive for the Republicans. There are not a lot of people in the political environment really kind of were looking at that happening, and so nice little positive for the Republicans. The Senate to me is it's still open officially, but I don't think the market's that unclear about it. I think the market, like I've been talking about over the last week, is fully embracing the theme that Biden will be the president and that the Republicans will have the Senate. And even though that we gotta go through some legal processes here, Greg, from the president, who has a legal right to challenge certain things up until about December 14th. So but I still don't think the market's that unclear. When you're looking at the Senate, the Alaska race, Tim, that 75% in there,
yeah.
And it would be utterly shocking to not see that Senate seat go to the Republicans. So I'm looking at this as a 50-48 split in the Senate right now, 50 to the Republicans, 48 to the Democrats. And it's going to be a battle there in January, obviously, in Georgia. But at the end of the day, I think that battle does favor the Republicans. And even if they only go 1-1 in Georgia, they still maintain majority. So I think the market, even though there's political uncertainty, I think the market is embracing a Biden presidency with the Republican Senate.
Yeah, I think that's exactly what's happening. And I think the market's moved forward. And it's not just today, by the way, or this week. It was even last week. You saw the upward mobility.
Has obviously moved forward. The market has moved forward far more than the political environment has.
Yep, no question.
And you might say that's a risk the market is not pricing in, right? But to me, I honestly, and I don't think it's that big of a risk.
Give me a look at the NASDAQ, Matt, next, if you can. I do want to break down a couple of these different indexes. Obviously, the NASDAQ had a couple of red candles, came back, found some moving averages, stuck it for one day here. What are you seeing in the chart, Matt?
Well, I was going to say this on the S&P 500. When we're looking at the S&P 500, technically right now, we're looking at this as a high level, high base type scenario. And I said, you're certainly looking at that as a buyer, right? We certainly have a bullish mentality on the market right now. Greg said the same thing, but what I was going to say is, well, guys, before we're even looking at the NASDAQ here, I would say, I was going to say, well, guys, even if the high base doesn't happen here, and we come down and retest these moving averages, aren't you still looking to be a buyer at that point as well? And I think the answer to that would be yes. Correct. If you saw a 2-3 day pullback coming down into some moving averages, you could definitely see this forming a little bit of a higher low, attacking that breakout a little bit more aggressively instead of it being overextended coming into the breakout. And now you're not overextended. And so the reason I bring that up is you would have that still as neutrality with the slight bullish edge forming a cup and handle type formation. And now you come to the NASDAQ And I kind of feel like that's just what the NASDAQ did. And we were talking about sector rotation a little bit yesterday. And I said, yeah, I do see money coming into to cyclicals. Absolutely. We do see money coming in to airlines, hotels, retails, industrials, banks, those cyclical plays out there that are economy reopening up plays. And so when you hear economy reopening up plays, those are all cyclical plays. Those are traditional market cycle plays, industrials, hotels, airlines, banks, these types of restaurants, GM, Ford's, the automobile sector, these types of, sectors that are cyclical, industrial based, manufacturing based, economic based, you do see money coming into these areas of the market post that Pfizer news a little bit more aggressively. And so, yes, I do think you're looking at those areas right now from a position perspective, not so much from a swing perspective, but from a little bit of a position perspective. But that doesn't mean technology has to struggle. Obviously, the last 2 days has been a little bearish activity for technology. But we're talking about a marketplace in technology that has been an absolute juggernaut. And simply because you have economy reopening up themes playing out a little bit more dominant now does not necessarily mean technology is going to go down. I'm looking at this, as a little bit of a bullish retracement, forming a little bit of a pivot right here in that 11,500 level. You're in that cluster of moving averages, which can act as a support and resistance zone. You see it over here as well. And I think, I do think we're a little bit premature in, diving into tech plays right now. Let's let it play out. But if support does form above that 11,500 level, I think next week we're talking about potential breakouts in a lot of the tech space. Right now, I think that a lot of the charts in the tech space are a little bit blown up, given what's been happening. You take Apple for a second, you probably aren't buying within the range here on Apple from a swing trade perspective. But let's say you break out of 122 or ultimately break out of 125. You have a different perspective there. And so if the NASDAQ finds that support, starts to threaten that breakout channel coming into later on this week, maybe into next week, yeah, you're absolutely looking at some tech plays out there. But it's not just the big names in tech plays. I was looking at the tech sector this morning, trying to find some individual stocks, and for a lot of the big names need a few days to kind of cook and establish some more technical parameters for breakouts or retracements. You do have some other stocks that have shown some significant strength in the tech space in front of, despite the weakness over the last couple of days. ADI has earnings in about 10 days from here, but forming a little bit of a high base at the top end of its range. FFIV, and these are all just pure tech plays. Gap up 3 days ago, positive range, positive momentum on the top side. GLW forming a little bit of a high base, following a breakout there on Corning. Qualcomm here, one of those bigger names that obviously has been benefited from merger and acquisition. And oh man, TikTok, I can't believe we forgot about TikTok. How did we forget about TikTok? But somehow we forgot about TikTok, and they were benefited off that as well. So there's plays to be had out there in tech. And I do think, even though you're freshening up those watch lists from a position perspective, in cyclicals, in those traditional, economic cyclical plays, the industrial plays, banking, automotive, hotels, airlines, I do think people's interest there is a little bit higher now than it has been in recent history. I still think, like we said yesterday, short-term analysis is different from long-term. Long-term, you always bet on tech. Let's see how the NASDAQ handles this little retracement that we're seeing. Let's see how it handles that potential breakout later on this week, coming into next week.
Mm-hmm. And we are seeing a nice bounce out of these two U.S. indexes today. By the way, Matt, we're seeing good strength around the globe as well. I mean, even just in the last couple of weeks, FXI took off, emerging markets took off, a lot of European companies took off. Just flash you a couple of different indexes real quick here. I mean, FXI here, took off, broke out of a triple top there, really beautiful. Look at SPGM.
I wonder what FXI would look like if it wasn't for Bob of bad news recently.
I know, and that bad news has brought that stock back down, no doubt about it. Yeah,
Yeah,
no, FXI would be
it'd be a juggernaut right now if it wasn't for or Baba with the combination of their earnings, their combination of their delisting of the Ant Group. I mean, just a little bit of negative individual stock news on a major company for FXI, but when you're looking at, you know, what we're seeing in the international markets, and you look at FXI and you look at the emerging EEM emerging markets, you are starting to see strength in these areas of the market that is a little bit stronger than our actual markets. And Tim, I've said this before, I'll say it again, and sometimes I feel like a redundant machine because you constantly have to reiterate things, but you always bet on the US markets. But there are pockets in that analysis where the international markets are in favored territory. And right now, post Biden's president election from last week, and we'll see if that is confirmed through the courts. But I mean, that is a working thesis in the marketplace. And that's what people have to understand. There is a separation of the political analysis from the market analysis right now. And from an international perspective, the international communities are celebrating that. The international communities are celebrating a little bit of America reemerging, you know, as a leader in the world. And again, that's not my analysis, guys. That's what the analysis out there in the markets are. And so when you're looking at EEM right now, when you're looking at FXI, when you're looking at, you know, the European indexes out of the FTSE, you are starting to see strength there. And you're also starting to see technical patterns develop where, you know, you can trust it a little bit. Obviously, I'm going to shake out vaccine news day like I did on the S&P. And when you shake out that vaccine news day, what would you guarantee to have this in EEM? You would guarantee to have this as increasing momentum, high base, established in a breakout channel of 48. Mm-hmm. And if it breaks out of 48, you're looking to trigger it on that one. When you're looking at FXI, I'm a little bit more hesitant on FXI right now than I am on EEM from an analysis perspective, simply because that the BABA news. Bob is a major player in China. BABA is the player in China. And so if I was looking at two ETFs, one had Apple and one did not have Apple, and Apple had, you know, the same degree of news as BABA has today, I would say let's probably stay away from that and let that shake out a little bit. So FXI, EEM, these emerging markets, the international markets, they're all doing a little bit of the same thing, you know, higher highs, forming high bases. The one I like the most is out of these two, FXI and EEM, would be the emerging markets ETF. And you got to treat the emerging markets ETF very similar how you treat the Russell 2000, right? They can fly when they want and they can lead when they want, but it doesn't last as long as it does in those blue chip indexes. And so short term, I personally would have EEM ranked higher than the S&P, and I think anybody who had a basic beginner level knowledge on technical analysis would agree with that. So it's just a matter of how do you want to play it. I don't invest in international markets. I bet on the U.S. That's just, I'm that type of dude, red, white, and blue. But like I said, from a seasonality perspective, there are times you see a position scenario. From an international perspective, there are times you see a position scenario. From a divergence perspective, there are times you see a position scenario in the international market. So right now, you got to see them as relatively strength against the U.S. markets. Don't think that will last. I don't think that will last. U.S. markets are the markets everybody wants. But in the short term, I think you got to be a little bit more bullish on the international markets than you are the U.S. markets.
You know, and I'm seeing that as well. And I appreciate the breakdown on both EEM and FXI. And, you know, as those things happen, like you said, they can fly when they fly, you know, but that doesn't mean that's a long-term analysis. That's more what we're seeing in the short-term charts. Nice looking little flag there developing. By the way, all this strength, whether it's in the U.S. or international, whatever we're talking about, is on the backdrop of some really, really bad COVID data that's continued to happen. And the market just is absorbing and not really, taking it into account in the short term. We'll talk about that. I want to give you.
Yeah, Tim, because I do have a question on that because the data is getting concerning out there. And, So what is just the high level data you're seeing in the COVID situation?
The biggest thing right now with COVID is hospitalizations. It's what we've been talking about all year. It's where their concern from public health policy has been, is hospitalizations. 62,000 people are now hospitalized in the US with the virus. That's the highest it's been. It's over 20% of the hospital beds in the Dakotas, which, by the way, I read that the Dakotas, if they were a country, would be the highest per capita rate of COVID infections in the entire world if they were an independent country. So right there, Wisconsin has high rates, over 15%. Montana, New Mexico, same thing. Same thing in Europe, by the way. France is looking at lockdown measures, Belgium. And I saw that the New Jersey governor came out and said that non-essential businesses are going to close after 8 o'clock, so more kind of public policy coming in here. And that's even talk about Texas being the first state to pass 1 million cases in the US. So Matt, and the market just doesn't seem to be concerned about it, but
and that's my question. And I want to get you and Greg's take on this. Why? Because the data has been concerning for not just today and not just this week. The data has been very concerning over the last month and a half or so. And the market has not cared about it. Like even when the market's hesitating, it's hesitating on something else. When the market's down, it's going down on something else. It's not selling on COVID. It's just not. And so despite the dire news we're getting and the data we're getting in the COVID scenario, why do you guys think, and I do have a secondary question for Greg, but after this one, why do you guys think the market has just simply not cared about COVID? Because it hasn't.
Greg, I'll have you start on that one. What are your thoughts?
Yeah, so I didn't know the numbers until you just threw them out there for me, Tim. I just know what's going on here in Canada where I live. Our numbers have gone up, like our quote unquote cases have gone up. But I know from where I live, and again, I'm not in a major metropolis or anything, but from where I live right now, in a town of about 90,000 people, we have 3 active cases, which is not that many. No. As for the hospitals, I've been in the hospitals recently. There's nobody in there with COVID that I know of, at least where I am anyway. And I've been in another major city of about 400,000 people, and it's the numbers are very similar, at least from our perspective. So the only thing that I could think of from a market perspective of why it's not reacting to the COVID cases is that I know here in Canada, from the data that I've read, and again, it comes from some pretty, at least in my estimation, some pretty reliable sources, the case count is up, but the death rate has been falling, and it's been falling since June here in Canada. So I don't know if we've got a better handle on it from a health perspective, or whether the severity isn't there, or again, not being a medical doctor or knowing anything about that. I'm just wondering if the market is just saying, you know what, we're going to expect a lot more cases, but as long as the mortality rate stays low or drifts sideways, or even, like I said, for us has fallen, then I don't know that the market seems to care about it. You know what I mean? And I know we've got some tests. Sorry, go ahead, Matt.
Yeah, what I was going to say, Greg, is hearing you and what you're talking about, dealing with a city of 90,000 people up there in Canada. You guys, I mean, if that was Salt Lake City, I would not even worry about it in any capacity. Like I'd live my life. That's what I would do. But here in Salt Lake City, which we have in Utah, I want to say handled it okay, right? We're pretty law-abiding citizens here in Utah. But I was talking to my niece, who is a niece, my niece who is a niece. I was talking to my niece who is a nurse, and she works actually on the COVID floor of the local hospital here in Salt Lake City. And 2 nights ago, I asked her, I said, well, how's it going there? And she said, it's a nightmare. It's an absolute nightmare. And so it's amazing when these pockets start forming, because we're going through some pretty nasty, severe case and hospitalizations here in Utah. It is amazing when this virus gets in a location, it can have a devastating impact. But it's slow moving to a certain extent. So it's just, I find it fascinating to hear different people's perspective based on what we all go through. And I find it amazing to see an international perspective versus what, we are dealing with right now in the US. There's a vast difference out there, no doubt about that. Tim, what about you? Why do you think the market seemingly does? Because Greg, basically you're saying, listen, we knew this was going to get worse. We were expecting a second wave. We're getting a second wave, and the market is ready for these types of numbers, right? And the market does that all the time. All the time, the
price is everything in, yeah.
All the time, right? So Tim, what about you? Why do you think the market has seemingly just put COVID in the rearview mirror, because it is acting like it does not exist?
I think there's several things. Number one, I mean, regardless of, how you're seeing the situation out there in your own personal, perspective, I think the market is seeing it from a data perspective, and they realize the economy is not going to close down again. I don't think that they're not worried about some massive lockdown to where businesses can't operate at the same level that, I don't think we're going to go through a March situation in any scenario at all.
We're not locking down. And if we lock down, we're going to do it with safety measures.
Yeah.
Businesses are not shutting down.
Yeah. And there's only so many themes that the market's going to care about. And I really believe that the market is just focused, primarily laser focused on the back end of this year to see if we can get a Christmas rally, post-election kind of malaise, getting through that, looking at that. And they believe, and I believe the market knows this, the Fed put is still in play. It is the best theme and the most strongest theme. You talked about themes earlier in the week, that no matter what happens, the Fed will have the markets back. And I do think you're starting to adopt some of that. And it might also be, Matt, just collectively, a lot of participants in the market are just kind of tired of hearing this data. Maybe they just don't want to think about it. And they realize, yes, it's a terrible thing. Their death counts have gone up, by the way, Greg. Fatalities in the US have been trending upward in a trajectory that's not a healthy thing, not something that we want. That data is concerning when you dig into it. I don't think the market wants to consider it, Matt. I want to adopt it.
For me, it's very, very simple. And I said this in June, and I've said it multiple times in the halftime report since June. I've literally said it almost on every vaccine news day. I don't care about vaccine news days, because I have a very simple belief. Whatever today is today. But I believe the market believes that there is a vaccine coming in 2021, and every single second, every single minute, every single hour, every single day, every single week, every single month between now and that moment we have a working vaccine is just noise to the market. Mm-hmm. I think the market is working under the assumption that everything between now and vaccine is just noise. It's just the amount of time we need to get back to being normal. And so I just don't believe the market cares about the data, because it doesn't matter what the data is. We're slated to have 50 million doses of a Pfizer vaccine here this year, and we're expected 1.3 billion doses of that vaccine next year. And I think everything between now and then is just news. And that's why, even in the halftime report, we don't cover COVID very much, hardly at all. On where it is dominant in the news media, we just haven't covered it very much, because quite frankly, I don't believe the market really cares about it that much.
Mm-hmm. Mm-hmm.
The market's like the honey badger. Honey badger just don't care.
It just doesn't care. Hey guys, I'm not saying I don't care about COVID. I do. I care about it, but the market doesn't care. Mm-hmm. Right? The market's forward-looking, and it has adopted months ago the forward-looking belief of a vaccine in 2021, and everything is just time and noise between now and then.
Why is it that when anybody brings up honey badger, I smile? I just
because honey, I don't know.
It's hilarious.
It's just funny.
It's just naturally hilarious.
There's not a reason it's funny. It's just funny. It's just makes me laugh. Yeah.
Well, that original video I think was one of the funniest things to hit the internet.
Yeah.
You know what I'm talking about? The honey badger don't care. He's like, whoa, get out of my way.
Now that's a good discussion on why we laugh at just the mention of honey badger. Just honey badger.
Somewhere planted.
Greg, I do have a secondary question for you. We were talking about international markets, and we have seen the international markets over the last week, outperform the S&P. We've seen the international markets, perform technically more consistent than the U.S. market basis. Are you looking at the international markets right now in a similar vein of thought that you think we could see short-term price appreciation a little bit more aggressively than the U.S. markets? Or are you just like, No, it's U.S. markets, and then it's everything secondary.
Well, I'm not sure which international markets you're referring to, but the TSE has kind of sucked for about 3 months
We're
now.
not going to talk about the Toronto Stock Exchange there.
No, hey, technically that's international, man.
No, technically
no,
it is, but in reality, you are just a distant cousin there.
Yeah, right? We're the redheaded stepchild of markets, I know.
Yeah.
Anyway, for international market, I started doing a bit of reading last few days there. I noticed that Japan's doing really well. Their financial sectors have picked up. They've had kind of a cyclical, like a cycle kind of turn there as well, and they picked up. China, they were starting to pick up a little bit as well. Only they started to meddle with things from what I read, that the Alibaba thing and all that. Had they left that alone, I think they would have been a lot stronger as well. So. Yeah, I think once Biden got elected, or whatever, pseudo elected, whatever the case may be.
We don't know for certainty yet.
Okay, I'm just going to say, Greg, if he got elected, the rest of the world seems on board with it. So.
We're a little slow in the U.S. Just give us time. It takes us a moment to accept certain things.
Yeah, I get it. I get it. So anyway, I think having said that, I think at least from my perspective, being Canadian and what I see from our governments here is I think that opens the door to the Asia markets and the other markets a little bit more from a democratic perspective. Now we could debate all day long whether I think that's good or bad, but we'll leave that for another day. But I think that's helping the other markets. But as far as I'm concerned, from a trader perspective, it's always the U.S. and everything else. And I think I really like the way you and Tim talked about the emerging markets, FXI, all that. It's pockets, right? Those are these like dine and dash trades that I like. You know what I mean? I don't tend to do too much long term with the foreign markets because I feel like I have less control.
Trading. I love it.
So less kind of control over that. Like, not that I have any control over any market, but I have control of what I can do with it. So I like the quote unquote dine and dash trading where, if I see a really good technical setup like we've got here in EEM, I love that breakout of 48. I love the analysis where you broke that down. Even if you get a quick one hitter from 48 to 49 and a half, right? That's a nice ROI, right? So you can look at these things like that. That's how I view the international markets. Mm-hmm. So, like I said, for me, it's U.S. and then everything else. Like, even my own home market is secondary to the U.S. So,
and I don't think we need to debate the reason why we have more confidence in U.S. markets versus international markets. I mean, we could debate that till never mind. I don't think it's a debate. I think we could talk about it till the cows come home. Yeah. But there are certain times, right, where you do see a little bit of a relative strength in the international markets. And can this be one of those times? At least early on, we're starting to see it. And even though I'm looking at it extremely short term here, Greg, I like that dine and dash type philosophy. Come get it and quit it, right? But
one of the things I think is interesting because of the question you asked is it U.S. and then everything else? Well, the reason that the international markets are reacting, the emerging markets and China and the rest of it, is because of the U.S. election. So it's all kind of tied. Like everything was on edge until the election was over, and now all of a sudden you get this pop. So, like I said, I think you kind of answer your own question there when you say, is it U.S. and everything else? Yeah, it's all tied together.
It is.
The markets. It is. The U.S. markets are the most highly traded in the world that I'm aware of. So, that's going to have that effect, right?
All right, Greg, a third follow-up question, Greg. Greg, you just got me doing this. Like, I feel like I'm just
I feel like I'm in court now.
Yeah, well, listen.
One more thing. Are you Columbo? One more thing.
Coach Frank does call it the lawyer tricks that I pulled there. But Greg, let me pep you like a lawyer with questions like you're on the stand for a second. Now you got me even forgetting now I'm back now. No, Greg, we've been talking and we have seen data recently, following the vaccine news specifically on Monday. that the economy reopening up play, I think the question is it legit this time, right? We've seen this economy opening up play in the market before, guys. You remember the massive price appreciation right here in May? That was all economy reopening up, right? And then obviously that puttered out, and we saw the airlines, the hotels, the energy companies, all of those cyclical plays, right, just get absolutely blasted when the economy was not truly opening back up. Well, post Pfizer news on Monday, you have a lot of people in the market believing that this economy is on the verge of, opening back up, seeing a little bit more, maybe I heard the Pfizer CEO said a light at the end of the tunnel to a certain extent. Are you buying into the economy reopening up play in the sense that we're going to see energy come back a little bit? We're going to see industrials come back a little bit. We're going to see finance. Finance is very economically driven over the last, 2 to 3 market cycles. That really kind of was broken in the 80s. Finance now cyclical based, showing, gap up mentality, high base mentality. We've seen it across the board in the last 3 days. Outperformance on Monday, outperformance coming into post-election analysis as well. But let's just take it from Monday on. We've seen these areas of the market, and once again, the cyclical areas of the market: hotels, airlines, cruise lines, energy companies, banks. We've seen these companies outperform on Monday, not take the sell-off on Monday like a lot of the other markets, especially the tech space, did. In the last 2 days, looking at these areas of the market, they have held their nose above that water. They've played very impressive defense, unlike some other more aggressive growth-based areas of the market. Are you buying into this sector rotation, or this theme-based rotation, however you personally want to categorize it? Are you buying into the hype that this may have some legs, where value finally comes back and at least competes with growth?
So great question. Couple of things that I want to say about this. So from all the sectors and all the things you just responded about, I call those the things that Mark Justice won't trade category. And so they've all been doing pretty well, the airlines and all that kind of stuff the last couple of days. The thing I find funny about this, and the market, we just talked about the market being forward looking, right? And right now that's the theory that the market's gonna, or the economy's gonna open back up and things are gonna get moving again. And obviously the vaccine news has a lot to do with that. Mm-hmm. My biggest concern here, and again, I'm always that outsider looking in on the US election. It was Trump, from all I saw, that wanted to fire open the economy again. He was dead set on making sure that happened. And Biden, from his campaign promises and things like that, was, we're going to tackle this COVID thing, right? So the numbers that Tim just brought up, the increase in numbers, the increase in hospitalizations, increase in that. My concern, just from looking at it from a macro level, is, does Biden get scared if these numbers pop up, and then does he try to shut it back down again? Mm-hmm. Does he put in so many restrictions? I think we were talking about, businesses, not all non-essential businesses closing at 8 o'clock at night or something. All these little things. Like, does he get scared and start implementing those measures? And if that's the case, then this little pop that we're seeing, I don't know that it has any legs, right? So. Again, you've said, okay, we expect to have something 2021, all that kind of stuff. That's what we're working towards for a COVID vaccination. Mm-hmm. But, do we get fooled again? As the WHO would say, don't get fooled again, right?
Lockdowns change the analysis.
They do, no doubt. And so, and I think it's the whoever the president is, if it's Biden, then what, he seemed more leaning to that possibility than Trump did. So I'm just curious Trump, as to how the market's looking at it right now. That's all.
I do think with Trump, you have a zero probability of locking down anything, right? I mean, that's just the reality of the situation. I don't believe under Biden we will lock down. I just don't. I just do not believe we will lock down. I do believe states will be more aggressive, Greg. I certainly believe that. We saw it out of the state of Utah literally on Sunday evening. State of emergency utilization here in the state of Utah. We all got it to our phones right around 9 o'clock, Sunday evening. And, Utah put in some very, very strict restrictions on COVID, in terms of social distancing. We have a statewide mask mandate at this point, which seems to be everybody, at least in my neck of the woods, my neighborhood, everybody seems to be following. We're not supposed to congregate outside of the household, right? So Tim and I, our families, and Mark, and our mother, and sometimes Tim's extended family as well, we all get Sunday brunch Sunday mornings. We're no longer doing that right now. So we do have those restrictions, but it was very clear in that utilization of the emergency on Sunday night that we are not shutting down businesses. And so what I do think you're going to see more states in the U.S., go a little bit more stricter on social distancing guidelines and mask mandates. But I think the analysis, at least in Wall Street, is literally this, is that we're not going to shut down again. We're going to have a stimulus to offset some of the additional cost, right? We talked about this on the podcast. Not your mom and pa small business down on the street corner doesn't have $100 million to add in additional, cleaning cost and making sure safety costs that Amazon has or Apple has or Google has. I mean, that's chump change and petty cash for those types of corporations. But for your mom and pa, American who has a small business, these types of lockdowns and restrictions are very, very, very difficult for small businesses to handle who run on razor thin margins. And so if you did have a national lockdown again, I think economically that is dire economically, because unless you have like a $5 trillion stimulus program, which is just not going to happen, right? So I think lockdowns, like a legit lockdown where we shut it down, I mean, that's economically, you don't recover from that in the short term. That is Great Depression × 2 scenarios. So especially with all these small businesses on the brink of utter collapse going into a second lockdown. So is it something in the back of my mind economically under a Biden presidency? Can he go to that ultimate level of shutting it down like we did in March? Maybe, but I don't think it's very likely. It's not something I'm that concerned with.
I would say that's the wild card, right? So the economy reopening, everybody really wants that, right? But with the numbers that Tim just brought out to us, and we're not just talking one state or a couple of states, we're talking 4 or 5 states there that are having some challenges, right?
Oh, no, it's not 4 or 5 states, Greg. It's our union, the United States. It is across the board in the U.S.
Right. I just with the way Tim was talking, there were 5 or 6 states that he named off there. So, with those challenges, like I said, I know what our politicians did here at home. We've had mandatory masks for several months now. We've had the social distancing even before that. None of that is eased up. As a matter of fact, we've gone in and out of kind of the different stages of lockdown here. And so with that has really hampered the small business community. And so, like I said, I would say if Biden doesn't shut it down totally, if they don't go down to a full lockdown, then I think your economy reopening thing that
has legs.
It does have legs, and it will get legs. But I think if the numbers get so scary, right? If those numbers, especially the mortality rate, if it gets so scary, I'm not sure what else you can do other than a lockdown to try and prevent that. Well, and that's my only fear, I guess.
And our mortality rate in the U.S. is not as good as some of the international markets out there. And there are logical reasons why that we don't need a debate here. But in terms of this, I do think you'll see more local municipalities, state, and even federal guidelines coming out in the future. I do think more states will act like Utah did just this past week. I do think you'll see more, hey, bars are closing at 8 o'clock, but I don't think you'll see bars are shut down. And the market itself, and that's what's important here, the market itself is not going to overreact to the headlines that we see in our everyday life of this lockdown or that lockdown, because the market is comfortable and is used to bars shutting down at 8 o'clock.
Yeah.
What the market would not appreciate, and which would throw a big, it doesn't mean the market tanks if we lock down. It just means the economy opening up theme doesn't play out, right?
Yeah.
Like, we had switched like a day trader to pandemic plays in a heartbeat here. But in terms of this specific analysis on the economy reopening up, I don't think that will be stopped simply because we have further restrictions. I think ultimately you would have to shock the market at this point, because they are so bought into that vaccine, philosophy coming into 2021. It would have to be something of some dire economic announcement to truly have that big of an impact. And I don't think any one of us are here. So where's your guys' head out then on plays like Boeing? Right. And again, I'm just using Boeing as an example, but this is a company that has had massive problems, both from an economic perspective, post-pandemic, as well as just an overall fundamental nature of the company. We don't need to rehash the, disastrous 737 storyline over the last 2 years. Boeing has made that disaster in and of themselves. But look at Boeing here. Yeah. Gap up into the 200-day moving average, holding its head above that level of the 200-day moving average. When you're looking at some of these other plays out there, Delta Airlines gap above the 200-day moving average, forming a little flag-based pattern, waiting for the 9 EMA to get up there. Mark, I hope he's watching here just so we can look at Cinemark here. Gap up, consolidate, threatening a breakout of that 200-day moving average. Taking a look at some of these sectors very quickly: industrials, an economy reopening up sector. Gap up, consolidate there. We already looked at base materials. We already looked at these plays throughout this week. Is your interest level increasing the more we play defense here? And at what point are you like, listen, it's time to rip that risk graph open and let the Kraken, what is it? Unleash the Kraken, right?
Unleash the Kraken.
Unleash the Kraken a little bit. Because I know and the reason I bring it up so much today, guys, is this is the question in the marketplace. Mm-hmm. We need to answer that question. So
well, let me take that one first there, Matt, because I think it is the question in the marketplace right now. We saw it on Monday explode to the upside. Last week in the halftime show, if you guys remember, I brought this up several times. I was going to spend the weekend planning, looking, researching, building a watch list of these kind of companies. And I'll give you an example of one. It was on our option report, Planet Fitness. I came into the week fully anticipating just coming in, going long Planet Fitness if I got the signal on the breakout.
Yeah, breakout 69. Easy trigger.
Beautiful trigger, all that kind of stuff. The gap made it so I couldn't trade it Monday, right?
Yeah.
Because it just gapped too far above my entry point. But the backfill, Matt, now I'm getting excited about this. And it's obviously not there yet. It needs to develop these retracements. And a lot of this, Matt, a week ago Monday, I was on a week ago Sunday, I should say, I was on an airplane for the first time since February,
February.
And bring up Delta Airlines for a second. My instinct, and I can give you a lot of examples, a lot of anecdotal stuff, but I'll just go from my own personal perspective now.
That's a Peter Lynch value investing principle, by the way, but continue.
I'm going to travel more next year. So I think a lot of people in business are going to start doing more things that they were used to doing. When I was at the airport, I had a little anxiety going to the airport. I hadn't been in an airport in a long time, didn't know what to expect. I'd been on planes many times.
Was it more because justices historically are notoriously bad at flying?
It was about the same. So
so it wasn't COVID. Okay, so it wasn't COVID concern. It's like, oh my God, I got to get on an airplane again concern.
Yeah, exactly.
Okay.
When I got to the airport,
I just wanted to make sure because I knew what you were more scared of flying than you were the actual
Exactly.
COVID. You're like, if COVID gets me, that's fine. I can try to protect against that. That airplane goes down. What the hell am I going to do?
Anxiety ridden.
I can wear a mask for COVID, but that mask ain't going to help me if the airline goes down. I know where you're heading.
You're spiking my anxiety right now.
Yeah, I know you're
Hey, you just put the mask on the front of the plane, you'll be fine.
Filter everything coming through. I love that. But when I was at the airport, though, I saw a busy airport, not only in Salt Lake City, but in Seattle. I saw a plane on Delta that was full. They had the middle seat out, but it was full on the window and on the aisle.
That should be permanent, Delta. Middle seats should be eliminated. I don't care if you lose money. You already lose money already. The government already has subsidies for you.
Yeah.
Like, seriously.
And we're wanting to buy into this. What?
We have to pay taxes to bail your shitty company out. Just remove the middle seat.
Yeah. And I just think people are going to, once they have experiences, because Matt, I'll tell you, when I get another plane, probably in January or whatever it is, I'm going to have a little bit more of an understanding of how they're handling COVID, right? It's like information and knowledge and experiences. And I think as humans get back to life the way they did, I do believe that this theme can have legs in 2021. Now it's going to be volatile and news sensitive. We all know that. That's an easy disclaimer to throw out there, because depending on the nature of short-term news, it can gap up like it did on Monday and whatnot. But I see potential here, guys.
I do too. I do too. But I am I'm fairly conservative on this one though, because listen, we can talk about the different micro themes developing. We can talk about sector rotation. We can talk about cyclicals versus non-cyclicals. We can talk about all of that. This to me really comes down to value versus growth. It really does. And we've had that value versus growth argument for the last 10, 12 years. And growth has been dominant. There's been pockets, kind of like international versus US. There's been pockets of value, but it's been a growth environment, right? And with what the Fed's done, it's going to be a growth environment. So in terms of this, I've been fooled once or twice on the value rotation before. So I certainly see the data, and I certainly see the philosophy, and I can certainly map it out in my head. And so that's why we're talking about a lot, but I need to see a little bit more evidence here. Now, swing trade, yeah. Light that puppy up on that retracement, Tim. Light it up on Planet, right? Wait for confirmation, but light it up. High base breakouts, light it up, right? You see a trade, take the trade. But I'm talking more about a true rotation that has longer lasting legs, not just a short-term pocket analysis, right? So for that longer term rotation, yeah, I'm seeing it. But even when we were bringing up the data yesterday on sector rotation, a lot of that data is, even though the last 30 days, energy, finance, industrials are the best performing sectors, a lot of that is based on just what happened on Monday. So give it a little bit more time, in my opinion. Because again, I've said it many, many times. If it is true that we're seeing true rotation from growth to value, and we're seeing true rotation from pandemic to economy opening up plays, great. If it's true, it'll be long lasting, and you'll have a lot of good position and swing trade analysis. For right now, I think you got to take this as a short-term traders type rotation. Can it have longer lasting legs? I think we need more data here.
Yeah, and I think
I think it's impressive early on, though. I do think it's impressive, and that's why we spent the bulk of today talking about it.
Yeah, and that's a prudent approach, as always, no question about it. But you're right, though. If I get my signal, I will make those swing trades on these companies.
See a trade, take a trade.
Absolutely. Let's flash through commodities real quick here, guys. I do want to get to some individual companies here in just a few minutes as well. Give me a look at crude oil first, if we can. We'll then go to gold, Bitcoin, the others. One interesting note on crude oil, I did see that OPEC came out and cut its forecast for global oil demand again. They did it last month. They did the month before for 2021. This is kind of par for the course with them, Matt. We know that.
I am a long-term bear for exactly that reason.
Yep. They said that they expect oil demand growth only to be at 6.2 million barrels per day, a downward revision from last month by 0.3, downward revision from July where they thought it was going to be 7.
They haven't hit a target number this year.
Yeah, they're kind of like Tilray.
They have not hit one target number. Tilray, good play there.
Yeah, they cannot hit projections, no question about it. They keep downwardly revising them. It's just a reminder. I am a long-term bear on oil. I just think the themes around this, and it's putting a little cold water on the little.
I'm a believer in the ESG movement, so.
Yeah.
Tilray can't hit a projection because they're too busy hitting something else.
Fair enough. Yeah, you bring up a Canadian company. Greg has.
That's where the deep analysis comes from, though, Greg.
Yeah.
All those.
You heard it here first.
That's right. Anything in the chart, Matt? We've had a pretty good rally the last.
No, we've already started telling jokes. Do you think we have anything else to say on crude oil?
Not a thing. Gold next.
When you start with the jokes in the analysis, that is usually the last.
Before we go the other way, though, when you guys started talking about rotation into value versus growth and things like that, I guess my idea of value is very different than yours, because when you start looking at Delta Airlines or Royal Caribbean or those other distressed
they don't
stocks,
have value right now.
No, they're so far from value that it's just not even funny. Value is Coca-Cola and Walmart and Hormel Foods, and those are value plays, right? So all these other are, like I said, Mark won't touch them, and for good reason, right? Yeah. I call that bottom fishing, and I think if you're going to bottom fish, you might want to find something in energy. I think you've got a better chance at bottom fishing. Not that I recommend that by any means, but I think swing trade, no problem. But if you start looking at position or core position trading, I don't know that I'd be putting it into airlines.
No. And let me clarify very quickly. When I say value, I don't see fundamental value either.
Okay.
I literally spent an hour and a half on the Monday podcast detailing the reason of why we need to develop theme-based trading, because there is no value in literally anything right now. So no.
Okay, fair enough.
When I say value versus growth, I'm talking about the categorization that we traditionally put on certain companies, right? So your traditional defensive plays versus your aggressive plays, your economy opening up. So I'm just talking about categorizations. When you're talking value, you're talking more from a fundamental perspective of actually assessing the value of a company. And I do think those are two different forms of analysis.
For sure.
So, yeah.
Mm-hmm. What are you seeing in gold here, Matt? Kind of trying to find support, stick support here. Yeah,
nothing hanging out, partying, taking a siesta, going on vacation,
hanging out with those guys at Tilray.
Yeah, hanging out with Tilray. Having Tim asked me yesterday if I'd prefer going to a gold bug party or a Bitcoin bug party, and I said no, give me the gold party. But if the Bitcoin party was happening at the wheat farm at Tilray, I might be interested.
Well, the Bitcoin party's been raging lately. By the way, it's up again here today. Give me a look at Bitcoin, because Matt, we've been talking about that 16,000 level, and here we are. I mean, here we are, a little 3-day flag, Matt, ever so subtle, and then just relative strength here today, up another 4%. Where is this breakout? Because I don't think it's right here at this point in the day, but we're pushing close.
I kind of feel like I'm Russell Crowe in Gladiator.
Okay.
You guys remember the first scene where the Roman legions are fighting the Gauls, and the Roman legions are all they're decked out, obviously. Yeah, you do your thing, Greg. And the Roman legion is decked out and hold. And the Gauls are charged. Hold. And that's why I kind of feel like I was mixing my movie analogies. Braveheart. That was William Wallace when he was going to pick up the sticks and nail the horses. That scene. Hold. Don't break. Hold. I just kind of want to tell Bitcoin just to hold back a little bit. Just don't break yet. I know it's weird. I know it's a weird philosophy. Cook a little bit.
I love that.
A little bit.
I love that movie so much. I literally have to look up where it's streaming and go watch it again right now. It is such a
hold.
Yeah, I love that scene too. I know exactly what you're talking about. It's that patience, right? It's that
patience. Well, if he brings up the sticks, they stop the charge and they lose and they all die. I'm not saying you're going to financially die if it breaks today, but I do think it's a better pattern if it does consolidate a little bit more. I still got Bitcoin very overextended here in the short term. The 9 EMA has not even caught up to it. And, you know, it's going to do what it wants. It doesn't listen to you. You know, I kind of feel like I'm a fan and watching a football game sometime when I'm yelling at charts every now and then. But, you know, I just feel like if we can consolidate a little bit more, you're going to have a little bit of a cleaner breakout of that 16,000. But I mean, if you're trading Bitcoin and you're waiting for a 16,000 breakout, you're looking at this level right here. You're saying, okay, if we can get above that 16,100 level, it should be go time. And you got some pretty tight consolidation on the 15-minute chart, but I'm talking a little bit longer term here. When you look at that, give me another week of consolidation. Give me nothing. Go on vacation, Bitcoin. Just go on vacation, and then let's let that consolidation break out. Then we run. I think if and it could just go perpendicular here. It's Bitcoin. We're expecting a blow off top. I'm just kind of being a little spoiled brat trying to get the perfect technical setup here. But it has the legs to go perpendicular. We'll see if it can. Give it a little bit of time to cook, though. But I'm looking at that 16,100 level.
Coach Emily in the chat here is having some fun with our movie references. Says, can we have a Zoom tackle movie night and watch pirates and war movies?
Oh my
Emily,
God, Em, you want to? We'll share my screen. We'll all watch. Oh man, what are we gonna watch? We gotta watch Gladiator.
Gladiator would be a good one. Pirate movies.
Are you kidding me? I might just be like, no, I'm pulling dictator status on this one. We're gonna start with Apocalypse Now.
That's a great one as well.
That's a good one, but I will say I think Zoom will flag us if we show a movie over Zoom.
Are you kidding me? I have done this with NFL games when Tim could not watch the Bears. I literally put it on my streaming. Tim watched the Bears and we watched the Bears game together.
Oh wow.
It was a nightmare for me, by the way. No, movie night, tackle train coach movie night. We can talk shop, you know. Oh yeah.
Let me ask the team out there, what do you think would be the best pirate war movie, any movie that you would love to watch, you know, as a team?
Pirate movie, war movie.
Emily said pirate.
You and Emily, I am going to talk with you and Emily later. Where you cannot put Pirates of the Caribbean, Emily, in the same sentence as Gladiator. You can't do that. We're talking Saving Private Ryan and Apocalypse Now and Full Metal Jacket and Platoon. We're going to go back and we're going to watch some 1940s movies. I'm going to actually, you know what, Emily, I'm going to do for you? This is just for you. You and I, we're going to get all the coaches. We're going to watch Pearl Harbor together, and we're going to really detail the menage a trois that was happening in that movie of the love interest. I'm very interested in getting into the coach's analysis on that.
Any Ben Affleck reference, I'm out. By the way, I was having fun here. You know, I'm having fun here. You got to bring up your favorite actor. You know, I get it. You love him. That's a great movie too. Pearl Harbor is definitely one I would watch.
That is not a great movie. That is a god awful movie. That is a terrible.
I thought you loved everything Ben Affleck.
I do. It's one of those bad good movies, but it's not winning an Academy, dude. This is real bad acting in that movie. It's a terrible plot line. Plot line wasn't bad. I mean, it was Pearl Harbor, but the way the love story connected. Don't get me started. We're supposed to be looking at Bitcoin here.
We'll get back to charts. By the way, Emily's making me think of a movie that when we were last out at an event in February as a team, we all sat down and watched at the restaurant. We watched Titanic, Matt, and Emily, it was glorious.
This is me with your reference of Pirates in the Caribbean into war movies. This is what I got to do, Em.
Just plug his ears.
Yeah. You got the reference.
Captain Phillips, I've not seen, James, if that's a good movie.
Captain Phillips, great.
Is it?
Captain Phillips,
look at that.
Tom Hanks, Captain Phillips, great.
Let's talk stocks here, guys. By the way, if you're out there watching our show, just had a lot of fun here. Obviously, here today, we do that on a daily basis. Appreciate you guys coming in and hanging out. Hashtag Team Tackle in the chat. About once a week, I like doing this, and I'm going to ask you guys to do it right now. Just where are you watching the show from right now? It's a good reminder of our community, our presence, our audience, and you know we all are a team. We might be in LA or Canada or in Malaysia or in New York City, but we all are a team here at Tackle Trading.
Yeah.
Where are you watching the show from? Pop that in the chat.
While community answers, we could be having like an office Michael Scott type moment where every Monday we just start our week watching an hour worth of movies.
I like this.
Yeah.
I don't remember that Office episode, but I can see that being a Michael
Oh,
Scott
yeah.
thing. Yeah, we're just gonna do movie day,
It's gonna be movie
Monday,
day.
not Friday, by the way, not casual
Monday
Friday.
movie day.
Monday,
Monday
start the
movie
week
day.
right. I like it.
Sorry,
Tucson,
gentlemen, I had to
Arizona.
chop out.
Oh no, we're talking
We've been
movies right
talking
now.
about some very important analysis, Greg. You missed out on life-changing analysis there.
Let's talk stocks here next. We got a couple of stocks I do want to round up earnings on.
Yeah.
I do want to start with Alibaba, though, Matt, before we get into that. We did reference FXI and Alibaba a little bit earlier. And man, that explosion in FXI is not benefiting Baba right now because of some short-term stuff that has been happening with the Chinese government. Baba had their Singles Day event where they put more than $56 billion in orders through, kind of like a lot of the U.S. firms that do these kind of Amazon Prime days and all that
Shouldn't
kind
a
of stuff.
Singles Day be like a Match.com day?
You would think. I don't know
Right.
exactly where the name
What are we
comes
doing?
from, but
Go long on Match on Singles Day.
Yeah, like what are we doing?
but that's not benefiting Baba. They sold $56 million worth of product on that Singles Day, but its stock is down pretty big here as there's new antitrust regulations coming out of China. They're targeting some of their own firms. Matt, not a good look from the short-term analysis on the chart. When you hear antitrust regulations from the Chinese government on one of their biggest tech firms, does that put this stock on a stay away for you? Does it?
The delisting of NAN Group might have put it on a stay away. Their earnings report might have put it on a stay away. The investigations might have put it on a it's a stay away, bro. At least for right now. You got significant strength, outperformance happening in FXI, and Bob is holding it back. Yeah, this is absolutely a stay away right now.
Yeah, that's kind of where my head's at. I know it's been all over the place, and yesterday had a big down day. Earnings reports next, Matt. We had a couple of names that grabbed my attention. Not as many as we have in the weeks past.
Oh, it's so nice.
Yeah.
It's so nice to not have a million, billion, quadrillion earnings reports on a daily basis. But we do have a couple very quickly. Let's look at Datadog very quickly. Gap down after a head and shoulders technical formation. Came in at 5 cents a share versus the expectation of 1 cent. Revenue came in at 154.7 million versus the expectation of 144. Nothing really to see here on Datadog. It is one of those semi-popular trading companies over the course of the last 6 months, but for me, nothing really to see here from the bull standpoint from a trading perspective. Bears got significant support to kind of navigate. The only thing I would say on this company, this is an IPO from last year, or about a year and a half ago. And we've really never seen a test of that 200-day moving average. If this is a company you're following, you're probably looking at a potential test of that 200-day moving average for the first time in Datadog's public life there. Next, let's move on to Lyft here. Lyft reports earnings per share of negative 89 cents a share. Lyft and Uber, Greg, they know how to truly, embrace American capitalism of zero revenue ever and always losing money.
And I saw something today. It was one of the analysts, and they said they're still on the path to profitability.
Oh, okay.
I'm like, what the hell does that mean?
Where's that path end at?
Exactly. How far along are they down the path?
How long are we talking?
Is it the yellow brick road, or what kind of path are we referring to?
That's some beautiful Wizard of Oz analysis there. I think they stole that straight from Jim Cramer.
Yeah.
So in terms of Lyft here, 89 cents versus the negative 92 cents. Revenue came in slightly under 499.7 million. What's wrong with Lyft? You can't just do $300,000 and get it to 500 million. 502 was the expectation. Revenue down 47.7% year over year. Obviously, the economy opening up and the vaccine news day was very, 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 very good for Lyft here. But this earnings numbers, the market is celebrating a little bit here today, given the fact that they were not as bad as they were expected to be. Let me just throw a little bit of cold water onto Lyft analysis. They were as bad as everybody expected them to be. So to me, not a company I'm looking, but I do know it's a fairly popular company out there. technically, you got to love what happened on Monday. It is playing defense above the break, above the gap out channel. So let's see how it performs at 36. Let's see how it performs at 35. I don't know if you're going to see that gap fill. If the gap does fill, obviously everybody's going to be interested in it at that 200-day moving average. I think this is a wait and see approach on Lyft. Didn't really see anything else in their earnings numbers, unless you guys did. Did you guys see anything else on Lyft?
No, just it was a reminder. It was a reminder that don't get all swept up in the euphoria we've seen the last little bit. They still got some fundamental challenges on this company. So, yep.
Okay, and then Rocket here, IPO from recent history as well. This is a big company in the financial space, obviously. Rocket here comes out with the earnings, and this is their second earnings report, and that's kind of what I wanted to bring it up. Rocket comes in at $1.20 per share versus expectation of $1.03. Revenue came in above the expectation of 4.6 billion versus the expectation of 4.3. I'm taking the news fairly positive on their earnings announcement. I've never touched this company, but I'm getting a little premature interest here, to be honest with you. A lot of neutrality over the course of the since its IPO. You have that bottom basement support right there at $18. A lot of double top analysis right there about 24. I wouldn't be looking at it in the neutrality, but when you break this down and you look at it on a weekly chart, if you do get above 24, you could see some price appreciation there. So just something that's not going to happen this week, but something to maybe keep an eye on. A little conservative finance company here hasn't just rock solid neutrality. I am looking at that 24 level though, and if you can't break above 24, and I'm looking at it more from a trading perspective, not necessarily anything longer term in perspective. But if you break above 24, maybe next week, week after that, probably won't even happen next week. If you break out of the range, I think you should look at this from the short term. Mm-hmm. That's it, unless you wanted to talk about how bad Nikola is today.
I don't care about Nikola. I do want to take.
Can I just give an update on their revenue numbers?
Sure. Yeah.
Okay. Right. I just want to give a very important update on their revenue numbers. Nikola, and I did put Nikola on the ban list, so I'm obviously breaking my own rule here. But that's what kind of happens when you get to set the rules. You can break them.
Uh-huh.
So I am breaking my own rule here. But Nikola, I just want to give a very important update on this company. They still don't make money.
No, I'm guessing that.
No. Neither does Lyft. Neither does Uber. They take it a step further. When I say they don't make money, they don't have revenue.
They don't sell anything yet.
They don't have a product.
They don't have product.
You can't sell anything you don't have.
This is a company that does not have a product. And, obviously there's some very, very severe allegations around this, the former CEO of this company. Is he the former CEO?
He is. He did resign in September.
He better be the former CEO.
Yeah, the board replaced him.
All right. I still hate this company. Never mind.
Yeah, me too. Two quick last ones for me. Aurora Cannabis. We talked a little bit about Tilray earlier. Actually, a related story here. ACB. They announced that they're raising $125 million through a secondary stock offering at $7.50 a share. Stock came down right to about $7.50. Under the terms, you get that price for right now, but you can also buy more at $9 within 40 months if you do buy this
Come
stock.
get it while it's hot. 7.5. Got 7.5 here. 7.5. Anybody 7.5? Anybody 7? Because it's going to 9. 7.5 now. Act now. Oh, get out of here, girls.
Doesn't this scream a company in desperation mode that just needs cash? I mean,
gross.
Yeah, it does. And by the way, they got a downgrade on the same day. Stifel, an analyst came down and downgraded the stock, said, "We don't believe this company has demonstrated an enduring right to win for new market opportunities, particularly in the U.S., even with the new, kind of election results out of the States, Matt." So a little cold water on ACB.
ACB is Amy Barrett. They got to change their symbol.
Got to get a new symbol now.
It's a new symbol.
And then the last one, and Marky, perfect timing for you. Mark, I don't know if you saw this news today, but if you ever had interest in driving for UPS, 4 of us are all rocking a little bit of a beard. I don't know if I can call what I have here a beard. I'll throw a little cold water on myself there now.
Hold on. You can't do that. You can't do that. Tim, that is a very good effort. You and my son Tanya, and you're going through the same point in your life, and you'll get there, buddy.
Okay.
You'll get there.
I'll be able to grow a beard one day.
Yeah,
But anyway, UPS is lifting a long-standing ban on facial hair for their drivers. So you might see your UPS driver rocking a glorious full beard here in the future. You know, we're lifting the restrictions and saying, hey, we're moving forward with this. So
I think I would look great in brown.
I think you.
No.
Matt's questioning that.
There's my contribution to the halftime report.
Yeah.
Today.
I saw you pop in here, Marky. How are you?
Actually, I popped in because I didn't think you guys would see it, but Frank the Tank, Breakout Frank, put in some pullbacks to share with the halftime crew.
Oh, Frankie did.
And so I thought I would, play the role of Frank today.
So you got Frank's charts. I love
these
it.
These are Frank charts.
Okay.
Did Frank put these on Twitter?
He put these on our Slack channel. I'm sure he put them on Twitter as well. But
Crocs is pulling back, so that's part of
let's
that
start with Crocs, CROX.
Oh,
straight from Frank Martin on Twitter.
Bullish retracement, trigger point above 55. Who's signing up? Yes or no? Just give me a yes or no.
Yes.
55.
Technically speaking, I have to. 55.50. I see 55.50.
Yeah, I want to get above those.
Okay, wherever it is, 55.50 to 56. You got technical.
I won't wear the shoes, but I'll buy the shares.
It's clean.
Okay, I need to know who is wearing the shoes. Tim, would you wear the shoes?
I would wear the shoes. I don't have a pair of them, but I would wear them.
Are you going to buy a pair of shoes?
There's no chance I'm ever going to buy their shoes.
Okay, me either. No, but this is a much prettier chart than their shoes.
Do you know what would happen if a Canadian wore Crocs outside in the winter?
You would never have to. You would have to come to America.
The feet would freeze off. Like there's holes in them. Like what are you going to do with that?
Doesn't work,
you would not be allowed in Canada ever again.
Well, if you just put a little fur around them, they'll be mucklucks, right?
Yeah.
That's what Crocs needs to do.
You guys are too tough out there.
Yeah. That's funny.
All right, I'm in on Crocs too. Next
one,
candle.
Next one, EVRI.
EVRI, $10. Ooh, I really like this. Took me a second. It wasn't one of those ones where I was just like, oh wow. But yeah, nice little flag-based pattern with momentum and trend, flag on pattern, momentum stalling there at $9. You look at this from an intraday perspective, you see that trend line coming down on the 30-minute. You look for horizontal support to start forming. You're forming right there at that significant whole number of $10. Greg, can I get you to sign up for a trade with the trigger above 1030, stop loss underneath $10 with a target of, well, I'll just give you the base, 1110.
You know I love these things when we put them on the stock report, so I'm all in.
Oh, cheap stock play?
Yeah.
Like this Greg's baby. Mm-hmm. Tim, you in?
Yeah, sticking right around 10, little doji. I like this setup.
Mark?
Yeah, I actually like it for a position trade a little bit better, even if it came down a little bit.
Let me see. Listen, you're not getting your down. You have to buy now. You're not doing that today.
No, I mean, if I got a deeper pullback, I'd do it.
Yeah, no, you're not doing that today. No, that's not the game. You can't do your little tricks to where you're always right.
I mean, I like Crocs better, but I don't mind that one at all.
You gotta hold Mark's feet to the fire to get him to actually have a take.
Mark needs a t-shirt. Mark needs a t-shirt that if I had a deeper pullback, I'd buy.
Actually, just leave it at that. If I had a deeper pullback,
Nope. We are so lucky Gino's not here right now.
Oh, no. The t-shirt's going to say, I like deeper pullbacks. And that's his all. PNR is the next one.
Pen to air. I don't like this one near as much as I like the other two.
What is it, Greg? What is it? Because I had the same.
I don't know. This looks like the top of the Empire State Building to me, and it looks like it wants to go down further.
Give me an hourly, because that candle is startling. Yeah.
No, that's vaccine candle.
Yeah, I know.
We got a lot of vaccine candles.
I don't like this one as much either.
It feels rotating over. It doesn't feel standard retracement. I mean, I see it. I mean, the trend's nice, kissing off the 20. this rounding top and then the gap off of it was more of a high base. Now it's a flag with the gap. I see the trend, see the pattern. I just kind of like the other ones a little better.
Mm-hmm. Okay, next one, Marky.
Next one is double T, TT.
Double T. Yeah,
Train. Yeah.
Same.
Yeah, I mean that's your standard flag-based momentum retracement into the rising 9 EMA. Yeah, that's momentum.
That is a
play.
classic momentum play right there. Everybody in on that one, right?
Mm-hmm.
Yeah, I mean, again, this is why we don't do dedicated numbers, because it's so subjective based on your own personal rules. I mean, but when you're looking at confirmation, yeah, I mean, you got to have that discussion. Aggressive confirmation above 143, conservative confirmation above 145. But from a trend pattern perspective, it's a yes. It's just a matter of how you want to map out the trade.
Mm-hmm.
All right, 2 T's is not enough. Let's go TTD. TTD.
TTT, trade desk, bullish haramis, right? Bullish haramis, inside candle, folding comes by the preceding candle. Those are traditional slowing momentum candle-based patterns, typically fairly positive with a simple confirmation above today's high, right? You're looking at this as a momentum play post earnings announcement, positive earnings, fill the gap a little bit, let that 9 rise up to it, breaking it down on the intraday analysis. I love this puppy above 750. I think that's confirmation, and that's right where the high of the day is today. Fits pretty textbook from a bullish Harami flag-based pattern. Pretty standard technicals there.
I like this one the most out of the ones we've looked at. I love the upward
I like that $10 support level on that.
It's clean. I just love the volatility upward on the earnings, the volume behind it, backfilling. So for me,
it's a big boy trade.
This is one I like.
Yeah, this is a big boy trade. This is like put on your big britches and let's get it on.
Yep.
All right, last one, the Frank the Tank.
I always think about our grandmother, Tim. Always.
Wow, I like a deeper pullback, and Tim likes a momentum trade. What a shock. Last one is MGM.
MGM, need some time to cook on this one. Keep an eye on how 24 is handled. We just looked at a couple of stocks that didn't need time to cook. And what was the difference? What was the difference on every one of those stocks?
Moving averages.
The 9 EMA had gotten up to the other retracements. This one, MGM, definitely keep an eye on MGM. Mark, it's one of your favorite plays in the casino space. I think it fits a lot of your analysis that encompasses some of the more traditional casino space, like the Wynn Resorts of the world, the Caesars of the world. It also has a little bit of a splash of the DraftKings of the world as well. So, this is a space. Obviously, the economy reopening up play here, a cyclical play that would fit the overall theme that is developing, post Pfizer on Monday. But I still think we need a little bit of time to cook. Let's see first how it navigates 24. That is an intraday support level. That's the gap out channel. That's the gap out breakout, or the breakout channel over here as well. So you're seeing a little bit of double bottom scenario at 24. When you look at this on the intraday, you see that double bottom right there forming at 24. So let's first see how it navigates 24. Let's see if 24 holds. More than likely, it gives it that time for the moving average to catch up, and then you trigger above most likely 25. So I just think it needs 2 or 3 days here, but good find, just a little premature.
Yep.
And all of those charts, Frank Martin, he does our tackle trading Twitter account. He's always putting up charts there. So if you're
Get him
on Twitter,
Frank. I'm looking at your Twitter. Oh, wait, you might be there. There's Crocs.
Yeah. You can follow Frank on some of these things on Tackle Trade Twitter, Tackle Trading Twitter account there.
Yeah, and I just dropped the direct link to the Tackle Trading Twitter account in the chat. And Frank's a great follow, guys. No question about it. If you're looking for good charts, good content, good analysis, Frank is he just loves his charts, and he there's a good reason. He's a damn good chartist. So glad you grabbed those, Marky, and came in and joined us and shared them with the team. That's pretty cool of you. All right, boys, let's start getting final thoughts here. Fun show here today. Let's start with you, Greg. Any last ideas for our audience? Any thoughts?
Well, I don't think we've tackled the elephant in the room. Doesn't the Masters tournament start tomorrow? And we haven't spoken about it at all.
The only thing important in the world right now is, does Tiger, and the only question that I have over the next 4 days is, does Tiger defend his championship at the Masters? And it's the only thing I'm going to be doing. And yes,
And
I will be here tomorrow, and I will put on the tackle trading pin, and I will do my duty as an analyst to help people navigate the world. But I will be watching the Masters on the other screen.
Tiger won the Masters last year.
I don't like you right now.
So I hate to burst your bubble there, Matt, but I put a small little wager on Mike Weir today. He's going to come back to win.
Canada's
to win his second Masters.
I am you. I'm going to drive up. I am going to drive up today just for you, Greg, my good friend from Canada. I'm going to drive up to Mike Weir Drive up there in Draper, Utah.
Yep.
Going to South Mountain Golf Course because I love our Canadian and fellow Utahn, Mike Weir. And people are going to be like, who's Mike Weir? Mike Weir was an amazing golfer. That's number one.
Yep.
But Greg, I don't like your bet. Number two,
especially for
in the Masters.
Hey, well, you didn't even ask me what the odds were, buddy. I'm getting
it's gotta be
1,001 to 1.
Those aren't good odds.
Those are great odds.
Those are not good odds.
Those are great odds.
Listen. You need 10,000 to 1. Anytime you get a 10,000 to 1 bet, you take that bet. But you aren't getting that. Mike Weir's no.
See, Mark will appreciate this. What you do is you spread the risk, right? So I've got Dustin Johnson, I've got Brooks Koepka, I've got Rory McIlroy, and I've got Tiger Woods and
betting
Mark
on the
Weir.
East Indian Trading Company being a better business model than Apple.
Dude,
That's
Mike
okay.
Weir-
The reward's great. I can go out to dinner if he wins.
I don't hate your bet, Greg. 1,001. I don't hate it.
You should hate it. You should hate every aspect of it. Yeah, Greg, you just had the guy that loses every bet in every game he ever plays.
All right, let's make this market related. Put up ticker symbol ELY, Callaway Golf.
Oh, Callaway. Bear retracement, kiss of death analysis, post-gap nightmare scenario. But that's because Tiger doesn't hit Callaway sticks, buddy.
That's right. What's Mike Weir's touting bell, isn't he? What's
Mike
Ma
Weir's
Bell's symbol?
with some golf clubs that he got from a pawn shop with my dad, Greg.
Hey, haven't you seen Tin Cup? You know.
Yeah.
Great movie as well.
Mike Weir.
Yeah, great movie as well. Yeah.
Give me another ball. That's all you gotta do. Give me another ball.
Oh, what a glorious scene.
Listen, Mike Weir might have his Tin Cup moment and hit 13 balls into the 12th. He might have that, but
it'd be totally worth it. It'd be totally worth the $5 I bet on him.
I feel so bad for you Canadians right now, Greg, that you have to go back to Mike Weir before you're like, that's like saying, listen, I was going to say Larry Zonka, but that does a disservice to Larry Zonka.
Can I get a John Candy reference in here? I mean, can we just start talking about Canadians for the next 10 minutes? I love my Canadians.
I'm telling you, there's nothing I geek out more in sports than the Masters. The Masters is my favorite sporting event.
Yeah, everybody seems to hate Tiger Woods, but I'll tell you the way he won it. Well, a lot of people.
Like greatness.
A lot of people anyway. But I'll tell you, the way he won the Masters last year was pretty impressive.
It was awesome.
Because he's not out driving those big hitters, but he's still like that's I forget what hole it was. It was a short par 3, and he stuck it within 10 feet of it for a bird. That was the most incredible shot I've ever seen. It was something to behold. He's
got some history on that hole too. Tiger's got history on that hole too. That you guys remember the one championship where he was chipping and it rounded the entire green almost and it just dropped down. You got the Tiger fist bump and so yes, guys, I will be here and I will have great analysis tomorrow. I'm just saying, if you see me doing this a lot, it's because I am watching the Masters tomorrow.
Masters start tomorrow, Augusta National Golf Course. I know it's like a holiday for you, Matt and Greg. It sounds like you're a big golf fan. I did not know that about you, sir, but that's awesome. It's going to be an enjoyable event, no question about it.
He said Mike Weir.
I didn't know it until the conversation.
Mike Weir is people who like golf.
Or Canadians.
Not,
Hey,
no.
hey,
Not even Canadians would have known Mike Weir was Canadian.
A guy who's Tom Cruise tall and can still win the Masters is impressive as hell. And and he's Canadian to boot. So
listen, I like Mike Weir. I just can't believe you put a bet on Mike Weir.
It's $5. It's supersizing at McDonald's. Actually, they won't even supersize it. So for me, I wouldn't care. I watch the golf anyway, Greg, but now I'm going to watch the leaderboard just to see if he makes the cut. Because otherwise, I wouldn't have cared, right?
Greg, he's not making the cut.
Okay, well,
I'm just going to say this. Your $5, Greg, the bookie already spent it on a McRib.
Oh, Jesus. That's all right. Who would
December 3rd, McRib.
Yeah.
Oh.
By the way, Mike,
I really enjoyed the halftime report today. It's one of those Wednesdays where we just didn't have a lot of news out there.
We're having fun.
We had some fun today.
Definitely having fun. Mike Weir did win the Masters in 2003.
Yeah, oh my goodness. Oh my goodness. Yes.
Stop loss on Mike Weir. All right.
Yes, please. The only way Mike Weir's golfing this week is because he did win. That's how bad he is currently. All
right, guys. We definitely enjoyed our show here today. If you enjoy our content, want to see what our coaches are doing on the back end, just come and join us. One thing that we do here in the halftime report, we break down the markets one step at a time, top-down analysis, but we're also here to build our community and promote our community. And if you're out there and you're a pro member, you already know the value of what we get. We appreciate you guys. If you need anything, let us know, team@tackletrading.com. And if you're not yet a pro member of Tackle Trading, there's a link in the description below of every one of our YouTube videos. You can come and join us. And lastly, if you've not done it yet, click that thumbs up button. Let's get the word out, get the analytics out there. Marky, we have an event tonight. I think two events, actually. One, the Bear Market Survival Guide, I believe, Mastermind Group. And then we have a YouTube special. Talk a little bit about those two things.
5 o'clock, Noah Davison right here on the Tackle Trading YouTube channel. We'll be talking about technical indicators, secondary indicators. There's so many ways that you can approach trading. And one thing a lot of traders do is they use secondary indicators to help provide confirmation or to get a read of if things are oversold or if they're overbought. I mean, I know those are two things I do. Noah's going to talk about how to use them in your trading, our YouTube special tonight. And then following that, for our mastermind group on Wednesday night, Tyler Craig will be hosting his monthly Bear Market Survival Guide. And Bear Market Survival Guide, it's a great system. And Tyler walks through, and it's actually it's one of those things when you hear the name, it's like, oh my gosh, it's how to go bearish. And that's not what it is. It's actually a bullish system that just teaches you how to trade it with protection. So that if you ever have those downside times like we did in COVID, or like we might have at some point in the future, you are protected as you are making money to the upside. It's really, really intriguing, interesting system. And Tyler will be holding that mastermind group tonight at 8:30 Eastern.
And guys, very quickly, if you're a member of Tackle Trading Pro member community and you're ever wondering when our webinars are, obviously you can go to right here on the Trade Center, click on events calendar, and you'll see whenever we do like Tackle 25 mastermind groups, bear market mastermind groups, obviously our YouTube special that you should probably change that and actually give it a name. It has been like 6 months. So time to give that one a name there, but you can always see kind of the schedule for that night and that day and on the events calendar. And if you're new to Tackle Trading YouTube channel, guys, make sure to always give us a subscribe and like. That helps us get the message of all things Tackle Trading out there to more eyes and more ears out there. So that's very much appreciated. And if you are not a pro member yet, you can always sign up for a 15-day free trial over here at tackletrading.com and enjoy what all the other pro members love in our scouting reports, our webinars, our 101 series that are educational based. Just come be a part of it. Check it out. 15 days free trial. Check out the systems. Check out the reports. Go out there and make some money the real way.
I love it. All right, guys, we are done here for today. We'll see everybody again tomorrow. We're out. Have a good day, guys.